Welcome back to the Swipe Savvy podcast brought to you by CreditVerse, where we talk about credit cards and personal finance in Canada. I'm joined again by my co-host and co-founder of CreditVerse, Alian. And today, what are we going to talk about?
We're going to talk about credit cards. As you know, it is CreditVerse. So we're going to talk about what credit cards are, why they're really beneficial to personal finance in Canada, and then what are some of the tips and tricks we have for maximizing some of the use we get out of credit cards. So let's start it really simple. Ilyas, what is a credit card?
It's a great question. A credit card, in my opinion, is a financial tool. No, you go ahead. I don't know how to define a credit card.
Yeah, I think you started off pretty well. I think a credit card is a financial tool that you can use that basically you can spend on when you go into a store, and you use it out of a credit limit, which is something a bank or a lender extends to you. And instead of paying it back immediately as you would with a debit card, you can pay it back at the end of the month, allowing you to get a little bit more flexibility with your finances. I think that's the main benefit of a credit card as well. You do get a little bit more flexibility. The flip side of this is there's a lot more risk. When you have a credit card, you can spend, let's say, $1,000, and if you only have $500 in your bank account, you're not going to be able to pay your bill at the end of the month. I think that's the biggest risk when it comes to credit cards, but there are also a lot of other benefits. Do you want to walk us through a couple of those?
Yeah, sure. I mean, the basic reward scheme of credit cards is either you have your cashback cards or you have your rewards or point earning cards. So let's start with cashback cards. They essentially do what they say. They earn cash back on pretty much all your purchases, whether that be 0.5% or 1%. There are some categories that have elevated cashback rewards. Essentially, at the end of the day, you're just earning cash on your spending, which is really easy to understand, really simple, and an easy and effective way to earn rewards. Now, what's the other side?
The other side is the reward side, and it's pretty much just earning points on all of your spending as opposed to cash back directly. So there's a lot of ways you can use these points. You can redeem them for cash back in some cases, albeit at a very poor rate. You can also use them to buy some merchandise if you need that new blender or new toaster. A lot of credit card points currencies have a way that you can use it on merchandise. Generally, it's pretty poor value. I think we did a video on this where you'd be paying like $600 or $700 for, it's like a set of knives that would cost a couple of $100 otherwise. There's a lot of other ways to use points as well. The main one we talk about on the channel is with travel, and I think that's the best value to generally get out of your points as well. Points, that being said though, they are a little bit more complicated to understand compared to cashback itself because the variability of how much you're earning is so different. We just look at it on a simple scale. If you have the 5x rewards that you get on a Cobalt card on dining and food delivery, let's say 5x is 1 cent per point if you redeem for cashback with American Express membership reward points. That being said, you can transfer them to Aeroplan, for example, which is a frequent flyer program, if you want to travel with your points. Now, the value there is really just whatever, right? Like in some cases, it could be 0.5 cents per point. So that 5x would really be 2.5%. But in some cases, if you get 2 cents per point, you get 10% back. So there's a lot more variability, and it's a little bit harder to really understand. But I would say in most cases, if you want to travel or you want to get a little more flexibility with how you can use some of the points, I think it's worth really learning.
I think at the end of the day, it's only as complicated as you make it. You can try and maximize rewards to the fullest by going all in, getting a few different credit cards, maximizing your spend on different categories, maximizing where you're redeeming these points. But you could also do what I do and just have an Amex Cobalt and collect membership rewards points, and when you feel like going on a flight, just redeeming them for Aeroplan points and just keeping it very simple. And obviously there's the other side, which I'm assuming you dabble, going all out, trying to maximize both earning and spending these rewards. But let's take it back a step, and we're trying to understand credit cards here. So the other similar financial instrument is a debit card. What's the key difference there?
So as I mentioned, I think a little bit at the beginning, the key difference, there's two, I guess, main key differences. One would just be the fact that you don't have to spend it, like you don't have to pay for it immediately. You get it back at the end of the month, or you get a bill and you have to just pay that bill if you don't want to incur interest on it. The other difference would be, I think, the level of fraud protection you get with a credit card. Credit cards have no liability, which means as long as you took reasonable measures to ensure that, you didn't give your PIN out to people or you didn't give your credit card to somebody else and they went and spent on it, you would be able to get any of the purchase they make on that card back if you do get frauded. With a debit card, that does exist to some degree, but it's a lot more complicated to go through the process. It oftentimes takes weeks or even months to get through an entire dispute, and I think a credit card just makes that entire process a lot easier. Now, that being said, another main difference is the fact that debit cards do not charge interest because you aren't really borrowing any money. It's just coming directly out of your bank account. And you want to explain interest, I guess, in a really base level.
Yeah, sure. I mean, hopefully you don't have to run into this situation because ideally you'd be using the credit card like a debit card, spending money that you already have. But in the off chance that you do incur an interest charge, essentially you're not paying your bill in full at the end of the month or whenever your bill comes. You have an outstanding balance, in which case you're charged maybe 20 to 30% sometimes of that balance in interest. And that's money you didn't spend, but you still owe to your credit card company now. And so that's pretty much, the basic definition in simplest terms. But building off that point, the other difference between credit cards and debit cards oftentimes are fees. So talk about those.
So the main fee I think we want to talk about is an annual fee. And a lot of cards have these nowadays where you have to pay effectively a membership fee to hold that card and get access to some of the benefits that card has. So I guess keeping it really simple, for example, you get an RBC Avion Visa Infinite card. You have to pay $120 a year to ensure that you're able to take advantage of the benefits of the card. For example, transferring your points or maybe using them for merchandise. Whereas, with some other cards, for example, if you have a really entry-level like TD Cashback Visa, which I think a card a lot of people start with, you don't really have to pay an annual fee there, but your rewards are also generally a little bit worse. There's less perks, and I think it's just two different ways to go about the same thing. Fees make sense to pay if you are able to take advantage of the perks. If you travel a lot, for example, a very common way that fees do end up making sense is through lounge access or potentially being able to bypass security lines. If that's an expense you think is worth it and you'd be paying for anyways, or you think it'd make your life a little bit easier, paying a few $100s a year for that privilege may end up making sense. But I think for a lot of people, especially when they're starting out, do not get a card with an annual fee. And I guess we can delve into that a little bit deeper. How do we really end up getting a credit card?
Yeah, I mean, for me at least, it started as soon as I turned 18. I wanted to start building my credit, and I felt responsible enough to manage that responsibility of holding a credit card. Obviously, starting out low, as you said, don't get a card with an annual fee to begin with. I just went to my bank, got the student no-fee cashback card, which was the TD Cashback Visa card, and just started building credit. And from there, everybody really takes a different path. I'm sure you started a lot earlier than I did, kind of building off that first credit card. It took me probably a year and a bit to upgrade to the Amex Cobalt, and that's where I am right now. I haven't really moved on from that point. But some people may be happy and comfortable with keeping that cashback card because it makes sense to them. They don't value those rewards that you get on a different card, especially one with an annual fee, because even if you build those points, if you rack up a ton of points, if you're not going to use them, why pay the annual fee? So it's really, it really depends on who you are, what your spending habits are, what you value out of the rewards. And, why don't you talk about your experiences, what you value, and what led you to your portfolio?
Right, so I think my experience was a little bit different. The baseline started out the exact same. I think we both went about it in very similar ways. And I would say this is the optimal way to go about it. When you're just starting out, start with something super, super simple. So you physically cannot really mess it up. You get like the cashback no fee card from your bank. It doesn't have to be a student card if you're not a student. Most banks offer a card that has no annual fee and no annual fee and no minimum income requirement as well. That's what I did. I went to RBC because I banked with them at that point, and I got the RBC Cashback MasterCard. And then about 6 months down the line, I got a bit of a taste of what points feel like. I thought, okay, let's get an Amex Cobalt. Then I got a Platinum. Then I think I got an Avion Visa, HSBC World MasterCard. There was a little bit more from there, but I think now there's a bit of a diversified portfolio, and I have a couple of cards from each issuer. But yeah, I think it's been a bit of a different strategy. I think I also value things a little bit differently to you as well. I think I travel a little bit more because that's where I find a lot of fulfillment. And I think I also was fortunate enough to have some of the flexibility that I could travel a lot more. And I did value some of the perks that came along with that, which is why I think it made sense to get some of those cards with those higher annual fees. But yeah, I think there's two different ways to go about it. There's no real right or wrong, or there's more than two. I guess there's an unlimited number of ways to go about it. And I think that's the beauty of personal finance. You can just take it at your pace and do what works best for you. That's really what it should be at the end of the day. And I hope that with this podcast, we're able to really equip you to make decisions by yourself and try to really evaluate what should work for you best, because it really is different for everybody. I think if we, go outside in the hallway and we go ask somebody else, like, what credit card do you have? How did you get into it? What's the next step? They'd probably have a very different experience to the both of us. And they're not wrong. You guys are not wrong behind that screen. And I think that's really where the beauty lies. So we talked a little bit about what credit cards are, why they're really good, some of the pros and cons, but let's talk about how to use your credit card responsibly. Because we mentioned use your credit card like a debit card, but what does that really mean?
Well, I think it's relatively self-explanatory, but only spending money that you have access to at this specific moment. So, one of the common things we've seen, or even with myself, is, okay, I'm getting $1,000 in a week. Why don't I go spend that right now? I have a credit card. I can do that. Even if it is a guaranteed $1,000 that's coming in, it's not guaranteed. Something could happen. And even if it is guaranteed and it does happen, it's going to happen, it does happen. It's good practice not to spend that money before you have it, because other things could happen in the meantime. You could incur an emergency expense. Anything could happen, and you're playing with essentially your financial well-being. And we'll talk briefly about this later on in your credit score. These are really important things that will certainly affect your entire life down the road. Important decisions rely on your credit score being stable and good. So I think, just making sure you're not spending money that you don't have access to.
Yeah, I think that's a really, really good way to put it. Do you want to talk a little bit about why first off, what is your credit score? And then we'll talk a little bit about why it really matters.
Yeah, so I think the way to sum it up would be it's a metric that represents your financial well-being or creditworthiness and trustworthiness to manage money and debt. So how does this start? Well, I'll let you talk about that.
So for a lot of people, I guess their credit score starts from them usually getting a credit card. This usually happens when you're like 18 or 19. If you're going to university, you might just want to get a credit card so you can, pay for some of those things while maybe you're away from your parents. I think that's what it was for the both of us. And then it really evolves from there. That's a good way to get started. You can set up a really, really good foundation with even your first credit card. Like, I remember my credit score, even 6 months in, was like at a 750. And in Canada, having anything over a 680 is like excellent or very good scores. And you won't really see a difference in some of the benefits of having a higher score, in Canada at least. Now, why this really matters is it does affect not even just your financial life, but just your life in general. When you're renting a house, a lot of times landlords will do a credit check to see, has this person paid all their debts in the past? They paid rent? Do they have any money outstanding? Are they keeping up with their car loan? Which is another thing that shows up on your credit report. There's so many different ways that this affects your life. Even when you're applying for jobs, for example. I don't know if your employer did it in the past, but my employer looked at they did a credit check on me to make sure that my credit score is decent. Because especially when you're working in finance, you're working in places that deal with money, you need people who are very trustworthy in that regard. So I'd say it's such a good way to just get your first credit card, pay it off every single month in full, don't incur any interest, make good use of all the rewards, and just set up a really, really, really strong foundation for the rest of your life. Because, if you have a 750 or a 700 or wherever going into, like, when you graduate, you can get whatever apartment you want. You can generally get a car loan, provided you have the income to support it. You can get a mortgage, which is, I think, something that we think about quite a lot. Home ownership is such a big part of our lives. We spend quite a lot of time at home, and it makes it so much easier to get a home if you are responsible with your credit from an early stage, and you can just, build upon that in the future.
I think taking a different side of things, instead of looking at what could happen in the future in terms of like success and stuff like that in general, take a look at the other side. If you start off your life irresponsibly financially, you're going to you dig yourself a hole, a pretty deep hole, and it's going to be very, very difficult to get out of that. You know, all those things that you mentioned, getting a mortgage, getting a job, we can't survive without these things. So it all starts with being responsible with your first credit card. Like, that's where it all kind of starts. And we talk a lot about debt and managing debt just because that's something that comes hand in hand with credit cards, unfortunately. It's just a side effect of the product. So being able to avoid those situations is really important, not just for your credit score, but for your personal and financial well-being, I think.
Yeah, absolutely. And I think that's really what we're trying to drill down here. Get a credit card, use like a debit card very, very responsibly. And, on the other side of that, you can also maximize some of your rewards. We talked about this a little bit earlier, but maybe I think the path both of us took was getting a cashback card first and then moving on to a rewards card after we did a little bit of research on how the rewards programs worked and how we could find some value there. But that's something that everyone should really take at their own pace, again, as we talked about earlier. And I think it's something that everyone should explore if you like traveling and if you think you're going to be able to get some benefits out of those perks. But yeah, I think it's a good place to move on to a rewards card and then kind of expand from there. But it really just ends up being use it responsibly because it can really set up your life in a very, very good way.
Yeah, and I think what we're trying to do with this podcast is we touched on a lot of different points. We've talked about cashback cards, rewards cards. We talked about credit scores, managing debt. And if all these terms are confusing or if they're new to you, there's no need to worry because, the nature of this podcast and the goal of this podcast is to essentially discuss each of these topics in depth for an episode. And a little sneak preview into these future episodes. We're hoping to not only discuss with the two of us, but maybe bring in some experts who can shed some more light on these topics. Bring in some other individuals who may be in the shoes that we're not, in terms of just a general consumer who has your typical knowledge about the space, and get insights from them and where people are really looking for knowledge. So just a little preview into what we have next. Do we have anything else to talk about in terms of understanding credit cards and the basics?
I wouldn't say there's too much more to add. If you're really looking to how you should get a credit card step by step, we do have a video about that on our YouTube channel, CreditVerse, if you're watching this, or if you're listening to this on another platform. I think it was our first video, so you might have to scroll down a decent amount. But I think I don't know if it's one of our best videos in terms of editing or recording, but in terms of, I think, value, I think it's provided more value than most of our other videos, just because I would say it's like the most simple video we've ever made. Like, we genuinely started off by saying, open up your computer and go to your bank's website. So we do try to make it as simple as possible in a lot of ways, and we understand that sometimes the topics get a little bit confusing, like preferred pricing. I think even for someone who knows reward programs relatively well, I'm sure that was a bit tricky for you to understand. But we do really try to keep some things really simple. We talked about how to improve your credit score and other videos like that on our channel. So if you guys are looking for information like that, and maybe you prefer the video format or you want to just get some addition to this podcast and some of the value you get from there, I'd say definitely go take a look at that.
Yeah, I guess we'll leave it at that. Kind of a short episode, but it was our first real episode, so definitely have a lot more to talk about in future episodes. What is our next episode? Do you know?
I'm not actually entirely sure yet, but
why don't you close this out and I'll check what that is.
Sure. So again, thank you so much for listening to this podcast. Please let us know if you have any suggestions for topics. I know we have a bit of a list going on right now, but we're really looking to see what the community really wants, because sometimes we do talk about some topics, and I think even some of my friends ask, like, hey, can you be a little bit more specific about this? And instead of giving every single person a 25-minute spiel about why this specific topic is super important and doing that, time after time, making a podcast and just putting it on the internet is a really good way to just get a blanket thing in. So if you guys have any suggestions for episodes, please let us know. Do you know what the next one is now?
Yep, staying on brand, we're talking about credit scores.
Awesome. So yeah, I think that's going to be a really, really good episode. We're going to really delve into every single way, every single aspect of your credit score. We're going to show how much it's worth, I think, and then how you can really, I shouldn't say optimize, but optimize your credit score and build it very, very quickly while also keeping it very stable so you can set yourself up for success in the future.
Yeah. So we'll leave it at that. Thank you for taking the time to listen or watch, and feel free to follow us or subscribe or whatever your podcast platform lets you do. And we hope to have you listen to us in the next episode.
Take care, guys.